Welcome, options traders. Well, there's a very hot topic you're probably seeing a lot of today, and that is with trading halts and limits. And I've had a lot of new traders asking, what in the world are these and how do they work? Well, here's an example of a recent headline. Dow plummets, trading briefly suspended. Shows that plummeted by 7% right here, marking the second time on Thursday that trading was temporarily suspended. So what does this mean? How does it happen? Well, these are what are called trading curbs or trading limits. And most of your markets have some type of bands or limits where these prices are allowed to trade. And the idea is that if they get outside of these limits, it's to allow kind of a cooling off period for traders to say, is this really what I want to do? Just so we don't have runaway panics. So I think most people know that during the regular trading hours, which are often abbreviated RTH on these websites, you're going to see that between 9:30 a.m. and 4 p.m. Eastern Time is when all of your the things you're used to trading, stocks, ETFs, options, futures, they all trade, what we kind of call the normal stock market trading hours. Now for this video, I'm just going to be talking about Eastern Time. So if you're in a different time zone, you'll need to do your own conversions. But during these times, we have what are called trading curbs, sometimes called circuit breakers. Now they apply only to downside limits during the regular trading hours. In the after hours, they can apply to upside. So we'll get to that in just a minute. But during the regular trading hours, you have three different levels. There's one that's called level 1 that is a 7% decline. And if that happens, trading is halted for 15 minutes, again to allow traders a little cooling off period. If we break that, we hit level 2, which is a 13% decline, which again is another 15-minute halt. And if we go beyond that, we hit level 3, which is a 20% decline, in which case trading is suspended for the rest of the day. It's not a break, it's not a halt, it's just flat out closed. Now it's important to understand, and this is where it can get a little confusing, is that level 1 and level 2 only apply from 9:30 a.m. to 3:25 p.m. Again, this is Eastern Time. But if it's 3:25 p.m. or later, there is no level 1 or level 2 curbs. So you could have a situation where maybe the market is really starting to tank and it might be 5 or 6% down, but then the clock hits 3:25 and then it goes 7% down and you're going, why isn't it halting? It could even go 13% down and still continue to slide. So the only time you can get the 7% or 13% decline trading halts is during the market open and up to 3:25 p.m. Now, of course, once the markets close at 4 p.m. Eastern, the futures continue, and they will trade basically all through the night. There's a couple of breaks. So this is how they work. Now, first of all, if there is a 20% decline during the regular trading hours, there is no overnight trading. The entire session is canceled. But if the futures are going to trade, we're going to be looking at the Chicago Mercantile Exchange, or the CME, and remember that their regular trading hours for the futures ends at 4:15 p.m. So they start at 9:30 a.m. like the stock market, but they run for an extra 15 minutes. That's their regular trading hours for the futures. And this is done in what's called an open outcry system. This is pictures you're used to seeing like on trading places with all the chaos on the floor and people out there. That's an open outcry system. And that goes till 4:15 p.m. At 4:15 p.m., the futures take a 15-minute break. And then we start with what's called the extended trading hours, or the ETH. And this is going to happen between 4:30 p.m. and 5 p.m. And it's on a platform called Globex. It's just an electronic trading platform. So there's a half an hour window where the futures pick back up. Then they take a 1-hour break at 5 p.m. And then they start back up at 6 p.m. till 9:15 a.m. The futures trade all through the night. And this is obviously when we can have more news, more panics, or even corrections, different things that can change depending on sentiment. Now, during these extended trading hours, you also have limits. There is a 5% up or down limit. Now, the upside is 5% above the 4 p.m. closing price. But the downside, you get two choices. It's either 5% below the 4 p.m. close, or it's the 20% limit that applied prior to the 4 p.m. close. It's whichever one happens to be closer to the 4 p.m. close. Now, it's important to understand that even if these limits are hit, trading may take place within the limits. So if you're trading the futures contracts to buy or sell at a limit that's within these bands, you can certainly do so and get them executed. But if you're placing limits outside of the bands, those orders will be rejected, excluding stop orders. You can certainly place stop orders, but if you're trying to do buy or sell limits outside of the bands, they're going to get rejected. So I know it can be confusing, but I hope this sheds a little light on the subject and helps you to understand some of the future headlines that we will undoubtedly see during the coronavirus scare. And for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and strategy lab at optionsa2z.com. Also, please join us on the Facebook trading group Options A to Z, and you can find a link in the description below.